All right, Candle Range Theory Trader back with you with another video showing you how you can create your own trading journal. So let's not waste time and get right into it. Now, there's multiple ways to create a journal, but this is the way I do it. It's based on a visual model showing you how to use Google Slides. You can just create a free Gmail account, have free storage, create a Slides account, and do it like this. This is what I like to see because I like to see what I'm looking for in a trade. Well, now, so while this works for any setup, I'm going to focus on the candle range theory because that's what I trade. If you don't know what that is, check the link in the description. You'll see exactly the method I trade to make profits. But ultimately, you're going to be looking for your setup, take a screenshot, make some notes, and just add it to the PowerPoint. So let's go over to TradingView now, and I'll show you what I mean. So in this instance, I'm going to be using the daily time frame. And all I'm going to be looking for is a candle range, be it a blue or a yellow candle. If you know what that can, if you've been following this channel, you know what that means. If a yellow candle shows up, that means I'm looking for a short setup. If a blue candle shows up, I'm looking for a long setup. And I'm going to see one that actually played out. I do not record losers. Okay, I just accept losers as being a part of the game, but I only record winners. All right, so that's pretty much it. So let's see here. I'm on Swiss yen. The pair doesn't matter, but I'll just use this as a brief example here. And then hide this. Let's see here. All right. So the first range, just going from right towards the left, that I see working out is going to be, let's see here, this one. All right, so this one right here. So the first thing I do, and if you're using the candle range theory, of course, take this method, but obviously it's going to be different for everyone. Candle range low on the daily time frame. Candle range high on the daily time frame. Like that. Okay, because it's a blue candle, so it's a long signal. Okay, so eventually you see price dipped. Let me make this a little bigger. You can dip down to a lower time frame. There's not exactly a daily money candle on this. There may have been one on the 4-hour, and I may record that as well, but it just depends on your style. So let's see here. This is Friday, so I'll make note of that. And then let's see, the range itself is, I like to record how big the range is. In this case, this Friday range, if you look at the ATR indicator right down here, the bigger number of the two tells you how big the candle is. So you just put your mouse over it, and you see the two numbers on the bottom left. It may be kind of small, but the range, the average true range of this candle is 125, but this candle was 171 pips. So that's why it turned blue. It's above 125, it's 171. So that's why I like to see, okay, well, if it's overextended, then the likelihood of it reversing is higher. So this is a 171 pip candle right here. And so this was on Friday. So this is Monday, Tuesday, and then Wednesday, the trade did hit the high. So I'm just going to note, here's what I notate. My keyboard here. I note the 171 range, 125 ATR, just showing, how big the range is and showing that it's above the average true range. And then TP hits on Wednesday, because I already know that this is Friday because I'm going to put it in the Friday section, and I'll show you that in just a second. You can do a little replay button if you want here to just show like just the trade and not worry about all the other candles like this. So just to make it clean, you can kind of play with the sizes here. So you can just focus on the range. Everything before and after doesn't really matter. I'm only focusing on this one part of the chart. So if you just want to have that, that's fine. So this right here will work. And what I'm going to do is, because it worked out like this, I'm going to include the 4-hour as well. Next slide shows 4-hour. Well, we'll say lower time frame. All right, so there we go. So that's what we got. So this is where the first thing I'm going to put. So we'll click the little camera on the top right, copy the image. And so now I come to I have it separated by longs and days of the week. So moving forward, on each day, I'm going to look and see, okay, what's the possibility from taking the trade on a Friday, which I'm showing right now. I paste it here, right click, paste. Okay, there it is. All right, so that's that. Okay, and then I dip down to the lower time frame and see the actual entry. So if I go down to a 4-hour and I'm looking on Monday, so this is Friday. Okay, Monday. Actually, the best entry would have been like Tuesday at 1 a.m. right in here. But actually, no, you know what? This is Sunday. No, what? I'm sorry. It could have been right here because this is the money candle right here. Sunday, 5 o'clock started. And then by the time it closed at 9 p.m. Eastern Standard, you could have got in there. So there could have been an entry here, but it just made a double bottom. So entry could have been here. And you got another chance, like, in here, on this candle's off. But I'll just stick with the one entry for now. That's all it really teaches, one entry. So I will get rid of this, or actually just redo it. Best entry, 9 a.m. Sorry, 9 p.m. Sunday night. Okay, why that didn't update, I don't know, so I'll do it again. Okay, there we go. All right. All right, now do 4-hour, just so we know the time frame. Okay, if we want to make it a little bigger, we can. So again, this is our entry right here. After this candle dipped and closed below, that's the money candle, dipped below the range, closed back inside. We enter here, and that's pretty much it. So this would have been good for 183 pips, okay, all the way up to the top of the range. Now this candle right here may have stopped you out, depending on where your stop loss is. So we definitely want to make sure that it's outside the range. So this would have been a stop loss of like 75 pips, which is kind of sizable. I'm going to be honest, that's kind of a big one. So when you're using a daily time frame as well, your stop losses may be bigger. So while a better entry may have been, well, definitely a better entry would have been on Tuesday because you would have been closer to the range. If you could have got in like down here, that would have been ideal. So, but either one of these, it gave you two chances to get in, Monday and Tuesday. But after this, it's pretty much over. So yeah, that's pretty much it. All right, so and then we'll copy this. Actually, though, let me do this. Let me see. For Tuesday, 5 o'clock a.m. There we go. Or Tuesday, 5 a.m. There we go. So we know our entry window. So we just copy this, go back. We press the plus button for adding a sign or adding a page, and then we just paste it. And I like to maximize it. Okay, and that's it. Okay, so we right click, get rid of the drawings. Okay, and then we go back to we escape the replay mode. Go back to the daily. I'll do a different pair, and then I'll see if I can find a short. I'll find a short example, and then that'll be it. Let's see. Let's find another pair though. So we'll just go Euro Aussie. Find a yellow candle here that worked out. Did that hit? That was a little poke. Let's see if I can find. I might do this one, the 6th of September, but let me do a little more looking. Yeah. All right. I guess that'll do. Okay. So we'll do 6th of September for the short example. I lost it just that fast. So let me go to it here. Bingo. There it is. All right. We mark the high. We mark the low. Okay, and this is on a Friday. I don't know what it is with Fridays. Fridays are really paying out here. But anyway, okay. So same protocol. Okay, we just go back to our. You like to keep the formatting the same. So the range and the average true range. Let me go back to the chart. Move this over. Okay, so we just see. Make sure we see our ATR levels. Okay, so let's see. The range was 112. I'm sorry, the average true range was 112. The candle size was 135. So we got a 135 range, ATR 112. Okay, because obviously 112 is bigger than 112 is less than 135. So that's why it turned yellow. So that's why we expect a pullback. Let's see, and then what else? Just to keep it uniform, we want to be sure. Okay, target take profit hit. I'm gonna say on Thursday. This would have been good enough because see here on Thursday it retraced all the way back up. I don't mind it being close enough to the range. It doesn't have to hit it perfectly for me. Just close enough is fine. So I'm gonna say best exit on Thursday. That's exit. Exit. Okay. Okay. So then we copy this. And then this was Friday for a short. So we go down to, see, we have the short section, Monday, Tuesday, Wednesday, Thursday, Friday. Friday's right here. Add. Like that. Okay. And then we can get rid of this. Now for this one's a little trickier because the money candle would have been that Monday, and then we had a retrace. So I'm going to go with our, if you remember, our best entry technique. After you get the money candle, we like to see a 50% retrace. So best entry would have been right here. I'm going to mark that. Bang. Time frame, I'm not really worried about this time because the thing is this. Okay, so you got your money candle, you got this, you got your money candle. Whenever price gets above, and let me make this a little bigger. And actually, I'm going to reframe this and retype it up. Whenever price gets above the 50% retracement, that's fine for an entry anywhere in it. As long as the high of the money candle holds, the trade is good. So I'm just going to retype this up and include the entry. And that'll be that. And I'm going to do this for the replay right there to show Thursday as being the best exit. So let's see. 135, 18 range, 112 ATR, exit Thursday. And this would have been good for around, we'll just say 120 pips. Okay. All right. So our trading day would have actually been Tuesday. All right, so there we go. So I like that better. So we have our range being mentioned, how big it is. The money candle right here, we're not trading on Monday. Tuesday gave the best example of an entry, best entry time Tuesday. You did get another opportunity on Wednesday as well here when it spiked all the way up here and then closed below. And then through Thursday, you could have got out before Friday gave a bigger retrace. So close enough to the range is good enough for me. So we'll copy the image. I'm going to get rid of this and paste it and make it bigger. And I like for them to just be all in one, but sometimes for some trades, you do have to drop down to a lower time frame if the best entry doesn't present. But that's for the daily. And I'll show you my 4-hour one, and then I'll leave you with that. That'll be more than enough for you to get started. Okay. So, but like I said, so this is your daily, because I trade the daily sometimes, very sparingly, but sometimes I will check to see if some daily ranges are developing. But then as well, I have my bread and butter is the 4 hour. So this is my 4 hour one. So I just do longs and shorts. So it's the same process here. 60 pip range. This is a 4 hour chart. Yellow range, money candle, and then obviously entry. The entry isn't on this one, but down. Just so you can see, it's like proof of concept. So here, yellow range. Of course, all these are shorts. Yellow range, money candle here. Price spike down, closed up there. And two as well, it's a good reminder to let you know, be sure your take profit is set, or you monitor the trade enough to know that once it gets to the range bottom, you want to start taking profits, because the last thing you want to do is expect for price to break out below the range, and instead it comes all the way back up like here and would have stopped you out. So take your profits when and where you get them. The less time you spend in the market, the better. So that's it. But that's the 4 hour chart. Let me see, what was this? Okay, and how I do this one, yeah, I forgot to mention. I do this one by times. So not days, but just times. So these are 9 p.m. ranges here. Then I have 1 a.m. candle ranges, which means the blue candle happens at the start of 1 a.m. and it closes by 5 a.m. Eastern Standard. And then I do long and shorts for each one. So these are 5 a.m., long and short, and then 9 a.m. long and short. And I know, what helps is that I know that if a range develops at 9 a.m., expect to hold it overnight, or if it's on a Friday, over the weekend. So like this one here, this blue candle happened at 9 a.m. So that means it closed at 5 p.m. And then the trade played out on Monday. You see the yellow spike up there. So that's what happened there with that one. Yeah, all of these here, yeah. 9 a.m., hold overnight, and then the next day it plays out. So that's pretty much it. I appreciate your time and attention. Thank you for watching. If you want more information about the candle range theory and how to trade it, definitely stay tuned to the channel, like and subscribe, and check out the other videos, leave a comment. I appreciate your time and attention, and you have a great rest of your day.